Welcome back to our weekly update. I'm Charlotte McLeod with the Investing News Network, and I'm here to give you a quick look at our top stories for the week. We're back after a brief hiatus, and what better time to return than the week of the U.S. Federal Reserve's latest gathering. The central bank met from November 1st to 2nd and hiked rates by 75 basis points, as was expected by many market participants. The Fed has now done 4 hikes of 75 basis points in a row, leaving its short-term borrowing rate in the range of 3.75 to 4%, which is the highest level since January 2008. At the start of the year, the range was much lower at 0 to 0.25%. Post-meeting comments from Fed Chair Jerome Powell have also been closely scrutinized. He indicated that while no decision has been made yet, the Fed may slow its rate increases as soon as the next meeting or the one after that. However, he emphasized that he thinks it's premature to think about pausing. In the resource sector, all eyes were on the gold price, which has largely trended downwards this year after peaking at more than $2,000 per ounce in March. Although it reached a high point of nearly $1,660 on November 2nd, gold tumbled after the Fed's decision was announced, falling as low as $1,618 on November 3rd. The yellow metal had rebounded back to nearly $1,630 at the time of this recording. The experts I've been speaking to agree that the gold price is unlikely to move upward until the Fed either pauses its rate hikes or starts to move rates back down. The idea is that higher rates are supporting the US dollar, whose strength is suppressing gold. As Will Rind of Granite Shares told me this week, we can only really start to talk about gold bottoming at the same time as we talk about the dollar peaking. As we wrap up, I want to take a quick foray into copper. While short-term headwinds have brought prices down from the high levels seen earlier this year, many experts continue to point to the base metal's long-term potential. Copper's positive outlook is largely tied to supply. Underinvestment in recent years means that few mines are set to come online in the near term, and declining grades remain a challenge as well. But there's a demand aspect to the copper story too. While the metal is known for its use in construction, its applications in the green energy transition are becoming increasingly important. Indeed, analysts at S&P Global believe unprecedented quantities of copper will be needed over the next 25 years. It's circumstances like this that have prompted experts like Joe Mazumdar of Exploration Insights to call copper the commodity of the decade, and to emphasize the opportunities that exist for investors who can identify stocks with quality copper assets. That's all for this week. If you like this video, make sure you subscribe to our channel and turn on notifications so you don't miss future updates and interviews. You can also follow us on social media or click below for our free report or any article mentioned in this video. We'll see you next time.